Do you need a massive bank account to make real dividend income? What if I told you that a minimum of $4,000 could generate $300 every single month? Today we're looking at 5 ETFs that make this possible, and the highest paying one on this list is going to completely surprise you. I'm your host at Divvy Dreams, and after building my own $120,000 dividend portfolio, I've learned exactly what works. Now, we tried looking at the standard tech stocks for income, but the traditional yields just are too low to hit our $300 goal. Therefore, we had to turn to high-yield ETFs from YieldMax and Roundhill. But you always must know what could go wrong. These funds offer massive yields, but they are highly volatile, meaning your principal investment can fluctuate. The secret to safeguarding your investment is to set a higher stop loss given the fund's volatility. Next are the 5 ETFs you need to know about, ranked from lowest to highest, paying based on the recent 4-week distributions. Starting at number 5, we have NVIDIA's ETFs, NVDY and NVDW. Starting with Roundhill, payments remain high and rising. Even after NVIDIA beat Wall Street expectations last week, the stock still fell. This past week, we hit 31 cents, bringing the 4-week total to $1.34, bumping the distributions up to $23.48. which puts us around 84 weeks to go before we break even. Turning to the performance, between the 13th and the 20th, we see a $7 gain between the 2 weeks. That rise will impact how much Roundhill pays when there is a gain. YieldMax is trading at $13.30 with a recent 4-week payout of 54 cents. Comparing the two ETFs, YieldMax fell by $1 while Roundhill nearly by 3x. This is one of the downsides of a double X leverage fund. Return on capital for YieldMax is at 70%, which is up. It typically averages around 60%, impacting the per stock payments by 2 cents. How does the Roundhill ETF do, reaching our 300-month goal? Using the 4K and the current price, we see that we can get 107 shares. If we take the recent payment of 31 cents by the number of shares that we're sitting at, is around 33 per week. And multiplying that by 4, we end up at 132, which falls short of our goal. Number 4 is AVGW, the Broadcom Roundhill ETF. I try my best to do a split comparison between both YieldMax and Roundhill. This week, that wasn't possible because YieldMax doesn't have a Broadcom ETF. Okay, so back to Broadcom. It looks to be trading down somewhat this past week, and that has impacted the 4-week total at $1.49. While last week we saw a price of 33 cents for week 9. For distributions, we're sitting right over $18, which puts us at just over 100 weeks until we break even. Turning to our other sheet here, we can see that over the last couple weeks, the performance on the 13th, we see that we're at $325, and that on the 20th, it has jumped nearly $7.50. Since we can't compare, we'll just focus solely on AVGW. The price of Roundhill's fund is down nearly $4, which is at a great price and could be a solid investment for those who want to pick up this at a discount. Although the stock is down nearly 26% from its launch price. How does the AVGW stock help us reach our $300 a month goal? Starting with the $4,000 investment and the current price of $38, we see we can almost get 104 shares. The next step is to multiply our shares by that last payment of 33 cents. That gets us just over $34 each week. We then multiply that by 4 to get our total monthly payment of $137.24. That is far short of what we're aiming for, so this stock is not a contender. At number 3, we have Alphabet's ETFs, GOO versus GUI. Yep, so starting with Roundhill's ETF, the 4-week distribution totaled $1.64 per share. The specific breakdown is detailed below. The total distribution is now nearly $18. To reach the break-even point, we still need approximately $30 more, which corresponds to 132 weeks of future payments. Okay, so turning to our other sheet here, on February 13th, Google was at 306, and by the 20th, it hit 314. Because of that, we saw an increase in payments from the previous week. Our strategy is to gain exposure to Google's growth. However, since the stock offers zero dividend income, we use the Roundhill ETF to convert that growth into a reliable cash flow. Looking at the YieldMax fund, we can see it's at 1364. It recently delivered a 4-week distribution of 41 cents per share. It's the lowest payer on our list today. Comparing the performance of GOO versus GUI, we observe that while both ETFs are down, GUI has maintained a higher percentage of its NAV asset value over the past 7 days. Despite having been on the market for a longer period of time, GUI's overall distribution is lower than GOO's. The GUI ETF is currently down 32% overall. This week's payment was affected by a 44% of return of capital tax, reducing the per share payment by 2 cents. How does the GUI stock help us reach our $300 a month goal? Starting with the $4,000 investment and the price of $64, we see we can get 62 shares. Let's multiply that by the last payment of 26 cents. That gets us $16 each week. If we times that by 4, we'll see that we get $64.74 monthly. That is the lowest amount yet of what we're aiming for, and therefore this is not the answer. At number 2, AMD's ETFs, AMDW and AMDY. Starting with Roundhill, payments are up from the previous week at 48 cents. The 4-week high also has AMD up to about 190, down from last week's total of $2.15. The excitement of AMD fulfilling orders for AI remains high. Looking at last week's performance, we see AMD has been trading sideways, although it managed to squeak by at a 0.6 cents gain. The performance is virtually the same. Switching back to our other sheet, we see that Roundhill's trading at 39 a share as compared to 42 last week. Total distribution is nearly $22 with 58 weeks left to break even. AMD makes a strong use case for that $4,000 investment as it really starts doing the heavy lifting towards that $300 monthly goal. Taking a look at YieldMax, it uses option trading as a way to make money, and as you can see here, that's exactly what's happening. Had the stock not split, we would be above the launch price, but since the new launch price is above 90, we have nearly 5 years of weekly payments before breaking even. Thankfully, the return on capital was actually a little bit high this week, so it had less of an impact on our taxable income. How does the AMDW stock help us reach our $300 a month goal? Starting with the $4,000 investment and the price of $41, we can see we get 97 shares. The next step is to multiply our shares by the last payment of 48 cents. That gets us $46 each week. We then multiply that by 4 to get our total monthly payment of $187.13. While still short of $300, that is the closest amount yet, which makes this a contender. Finally, the number 1 highest paying ETF on our list. You'd expect another mega cap tech giant to take the crown, but our top player is actually GDXW, the Roundhill Gold Miners ETF. Priced at $67, it's delivered an unbelievable 4-week payment of $2.62 per share. Looking at last week's performance, we see the gold miners has been trading up, sitting at 103 on February 13th, then up nearly $3 to 106 by the 20th. That's a $2.32 gain for the week. Comparing the two ETFs, we see that Roundhill is clearly taking the gold medal here. For YieldMax, this isn't much of a contest because of their low price and weekly payment. The good news is that this stock is really close to its launch price, which is rare for a YieldMax fund. The 4-week payment is at 79 cents, and the total distribution is nearing the launch price. Gold is likely to keep rising, which means this YieldMax fund could rise over its original price. The return on capital for this stock is nearly 60%, which leaves us paying 40% of the payout that gets taxed. How does the GDXW stock help us reach our $300 a month goal? Starting with the $4,000 investment and priced at nearly $67, we see that we can get 60 shares. The next step is to multiply our shares by the last payment of 76 cents. That gets us $45.60 each week. We then multiply that by 4 to get our total monthly payment of $182.40. Again, we're short of the $300 a month goal, so what's happening here? And why can't we break $300 with a $4,000 investment? As you have seen throughout this video, the examples of the 5 stocks I've featured could get you to $300 a month. But there's a crucial missing component that I need to reveal before you buy a single share. How does the math actually work to hit exactly $300? Here's the secret. To safely and reliably pull in $300 a month, the actual capital required is closer to $7,000. We wanted to rely solely on the $4,000 base to get there immediately, but the yield just doesn't quite stretch that far. Therefore, to hit that true $7,000 target, you have to either increase your initial cash investment or use margin from your brokerage to bridge the gap. Here's exactly what's happening with the math. To show you what you need, you divide the fund's monthly income by 300 and then multiply the answer by the fund's selling price. Why is this important? Because it gives you a tangible, personalized finish line for your portfolio. But you always must know what could go wrong. If you use margin to reach that $7,000, you are borrowing money, which amplifies your risk. So this could actually go 2 ways. Okay, so if you want to play it safe, you can just reinvest each week's profit back into the stock, buying more, therefore increasing your new weekly payout by more each week. Alternatively, you can get the margin. The way that works is they'll give you a 1-to-1. So if you put in $4,000, they'll give you $4,000. If it were me, I would not use the full $4,000. I would use around $3,000 and keep $1,000 of that in cash. This method amplifies the amount of money you can make and gets us closer, or if not, exceeding the $300 that we originally set out to get at the beginning of this video. To continue tracking the payouts, be aware that every week I'll analyze the previous week's ETF's performance and provide you with the latest information on the top 5 paying dividends. Subscribe to Divvy Dreams so you don't miss a video. Keep dreaming, and I'll catch you the next time.